My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make a little money. My job is not just entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. You never want to be too glib about saying that the market's wrong, because most of the time the market's right. The wisdom of crowds is surprisingly reliable. But some markets are more prone to bad calls than others. And this particular market seems to make them all the time. That includes days like today where the Dow dipped 37 points, S&P gained 0.69%, and the NASDAQ pole vaulted 1.56%. Let me give you a textbook case of misjudgment. Walmart. Last week, this massive retailer reported sharply higher revenue, a huge same-store sales beat, and some magnificent earnings growth. Initially, I think correctly, Walmart stock rallied. Then as the conference call went on, the stock just fell apart, falling 5 points pretty much in a straight line. It was a horrendous clubbing. Now, I have a lot of experience assessing retail, meaning I know a good quarter when I see one. This wasn't a good quarter. It was a great quarter. Walmart gave you a 14-cent earnings beat off a $1.70 basis. Management raised their full-year forecast by 26 cents at the midpoint. Inventories were down 5%, including an 8% decline in the U.S. All of that says buy, not sell. But this market's very confused. It doesn't seem to know the good from the bad. And yes, I get that they made some cautious comments at the conference call, though they spent most of the time talking about all the market share they've been taking. Walmart's got this flywheel of good e-commerce up 24%, advertising and e-commerce up 35%. Holy cow, does that have great margins? The price gap between other retailers and Walmart remains big. Back to school, unbelievable so far, yet the stock sold off in what I can only call a miscarriage of market justice. It's not just Walmart. At this point, I can't understand how Apple stock keeps falling. I mean, I know it had 3 quarters of no growth. Okay. But can we stipulate that everyone who bought the stock ahead of the quarter in the 190s most likely knew that already? It was hardly a reason to sell. Sell. If anything, I found it encouraging because Apple had no new phone. But the service revenue was enough to keep things steady. No, keep things great. Now, Apple stock is down 22 points from its high. I think that's insane. Stock's been obliterated, yet no one's the least bit interested in it. Holy cow. Despite a new iteration of iPhone on the rise, don't forget the Vision Pro, which I think is going to be really terrific. How can the sellers be so obtuse? Of course, the analysts had a hand in this, too. They hyped the stock when it was in the 190s and burned everybody by encouraging them to bet on the quarter. That said, when the new phone comes out, I think the sellers will look back on this moment and kick themselves for abandoning one of the greatest companies in history right when it bottomed. Let me give you another one that's just galling to me, GE Healthcare Technologies. This is the GE spinoff that makes gigantic medical equipment like MRI machines that happen to be huge profit centers for hospitals. Their equipment will be in tremendous demand next year. Why? Well, when doctors are trying to figure out who can get the new Alzheimer's drugs, they're going to have to do some studies. You'll have to get an MRI to measure the plaque in your brain before you get these new drugs. Look, they can't give them to everybody. They're too expensive. That's just tremendous demand for as far as the eye can see. Yet the stock's down 12 points since GE Healthcare reported. Look, I can't justify that decline. So we bought some more today for my Chapel Trust in order to average down. Yes, we did, because I believe we're right about this one. I just don't think it makes sense. I have to figure the sellers don't understand what I understand, because maybe they didn't run the American Brain Foundation Gale up in Boston this spring like I did. What else? Do you remember the knockout numbers that Microsoft reported? Almost every line was beyond reproach, but nope, the stock's been hammered so hard that we bought it twice on the way down for the Chapel Trust. Yeah, you can follow. Just join the club. Now, this is nonsensical to me. This isn't the usual pressure you might get when interest rates go higher. To me, it feels like incorrect pricing writ large. Microsoft delivered a fantastic set of figures, and nobody cares. Hey, you want a real crazy one? I'm going to let you in on one. How about the fact that Meta Platforms crushed the quarter, truly demolished the earnings estimates, giving you a sense of how much money they can make on advertising purely by figuring out workarounds from Apple's privacy rules. I figure this is the first of many great quarters. But traders say it's one and done. Let's move on. I say it's time to circle back and buy some. You get the whole quarter for free. That's crazy. Now, if you really want to truly see some psychotic price action, Look no further than PANW, Palo Alto Networks, the cybersecurity firm that reported last Friday after the bell. Nikesh Arora, the charismatic CEO, told us over and over again they could only put the earnings out on Friday evening because he had a big sales confab going on that weekend. But there was a widespread belief that the quarter had to be terrible, because why else would they report on Friday night? Nobody ever puts out good news on Friday night, right? I mean, is that where news goes to die? But I trusted Nikesh, which is why we stuck with Palo Alto for the trust. I told you he'd deliver another good quarter, so it was safe to buy. Now, I don't talk to many hedge funds, but oh boy, I was overwhelmed with people urging me to come out here and tell you to give up on Palo Alto. So many of them spoke with such confidence, yet in reality, they knew nothing. They know nothing! Palo Alto's stock soared 15% today because the quarter was phenomenal, but also because there were so many short sellers. You got an amazing buying opportunity because professional money managers couldn't bring themselves to trust one of the best CEOs in the business, one of the best CEOs I've ever met. Finally, there's the case of, yes, indeed, you know I had to mention it, NVIDIA. Here's a stock doesn't know when to quit, especially when the analysts keep battling each other to see who has the highest price target. For me, the price target game on the stock is painful.
The house of pain.
These target boosts aren't based on any news. It's just the same thing over and over again. NVIDIA, the king of AI. How many times can we hear "Long live the king" and see the stock take it up again on the same story? Beats the heck out of me. Should NVIDIA be up over 36 points ahead of Wednesday's quarter as it was today? Sure, it's got to have a monster earnings breakout, but keep in mind, this company already said its revenues for this quarter would be up much more than the street thought. It can only beat those elevated projections if it gets all the graphics cards it needs from its manufacturers. Remember, they outsource the actual production. One thing's certain, every point NVIDIA stock is put on here just makes its report on Wednesday even more problematic, even bigger in its importance. Let's hope it can smash the estimates. Otherwise, well, you might have a Walmart on your hands. You know, might be on NVIDIA. Own it, don't trade it. So don't freak out if the stock sells off after running up insanely into the quarter. Bottom line. Oh, we got a tough market here with the S&P and NASDAQ coming off 3 weeks of losses. But we are very oversold as of this evening. This market's best buys come not immediately after the quarter, but when the wrong-headed sellers or buyers come in. Don't respect your vision. Respect your own. You're better off sticking with your own convictions. And if you're initially wrong, like we were with Microsoft for the Travel Trust, it's okay. You just buy more into weakness for stocks of companies you believe in. Let's start with Patricia in Florida. Patricia.
Hi, Mr. Cramer. This is Charis. Listen, I've been watching you for years. I think you're amazing.
Thank you.
I have a concentrated position in Amazon and Apple. I mean, really concentrated. And I would like to reduce my position with these two stocks and buy Adobe.
I like Adobe. I like Adobe. You know, John Warnock, who just passed away, the co-founder of Adobe, but Shantanu Ryan's doing an amazing job. I think you should not take profits at Adobe. I think you should let Adobe ride. They have got a tremendous AI product. Let's hold on to that. Thank you for your kind comments. Can we go to Andrew in Alabama? Andrew!
Jim.
Andrew.
First, I got to say, amazing tomatoes, Jim, amazing. I want to have an insight on KMI, Kinder Morgan. Buy, sell, hold.
I think that's a ripe sweet tomato. I don't mind it at all. I take it on maybe a turkey sandwich with mustard and lettuce, maybe some rye. It's good, KMI. It's not great. Enterprise Product Partners is better, and I do prefer ET. ET buy home, all right? All right, this market's best buys come not immediately after the quarter, but when the wrong-headed sellers or buyers come in. Don't respect their vision, respect your own. Mad Money tonight. It's been a tough August, with just about 85% of the S&P 500 negative territory for this stupid month. Is it time to start picking among the rubble? I'm sharing where I'm looking for opportunity in this tape. Then Starboard Value acquired a stake in Bloomin' Brands, the company behind Outback Steakhouse. So is this the catalyst the restaurant chain needs to break out? I'm digging into the latest. And last week, all eyes were on Palo Alto Network's Summer Friday earnings report. And with the stock surging today, I'm looking past the drama of the Friday report, taking a closer look with the real deal, the numbers with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.